Yo, what's up, ladies and G's? Much love to those returning and shout out for those tuning in for the first time. I'm your host, DeAndre Evans, and look, I have a very special guest. Now, normally when I say that, y'all like, all right, Dre, I can see it in the title. I know who's coming, but y'all really don't know who I'm bringing on right now. This is a person that I highly look up to, someone I admire, someone who's known me since I was like yay high, like a kid. So this person is everything to me. She's my sister, she's my accountant, she's my mentor, she's everything. So without further ado, I'd love to introduce you to my sister, Jenni Hendrix. What's up, sis?
Hey, oh, hello. No, that was so good.
What's going on? How you feel?
I'm just like super excited.
Yeah.
You know, this is a top podcast right here.
All right, come on.
I'm honored.
Let them know.
I'm honored. I'm like, let's go.
Yeah.
But I know you about to get me giving some $500 advice, so y'all need to drop some money into it.
Right,
What's your cash app?
Right, put the cash app. All right, speaking of cash app, we're going to get into that too, because I know some stuff going on with cash app and everything. So first off, I know a lot of people obviously are interested in knowing more about you. So I'm going to open up the floor to you and just feel free to tell them about yourself, how you got started in the business world, where you are, what you do.
Well, I am a serial entrepreneur, but I'm also known as your tax strategist and your accountant. Jenni Hendrix. I started off in journalism and public relations. That's what my undergrad degree is in. And when I got in there and they told me what I was gonna have to do to make pennies, I said, wait a minute, what's happening here?
Yeah.
I've had t-shirt lines, I've done parties, I've always had something entrepreneurial to get some extra money.
Right.
I actually started doing marketing, just sending out proposals to all of the local businesses.
Yeah.
Simply taking something that I saw with the business and giving them a whole plan and saying, hey, if you want to hire me, X, Y, and Z dollars. One of the businesses was a tax firm. They said, I love this plan. I want you to implement this plan, but you're going to have to do some taxes for this type of money. And I was like, well, what I got to do?
Right.
They said, you give, I don't remember the number, it was either 50 or 100, something that was like light work for me. Get 50 or 100 people, I'm gonna give you that number. I'm 21.
Right.
I'm out here popping. I said, I got 50, 100 people on my phone right now.
Right.
So I jumped right in. That was on the marketing side, not knowing that I was actually going to take to the accounting side. I started playing around with the software, put my own taxes in, dibbling, dabbling like that, and actually saw I was catching on really well. So I went back and got my master's in finance and accounting with a certification in business turnaround management. I dove in all the way. So of course I hit the number. Made about $30,000 in 4 months. As a 21-year-old, I was like, what? This is what I do now. So it really was God ordained steps. Because I knew I wanted to make money. I didn't really know what I was gonna do. And I started just branching out there, and he was like, all right, try this. I was like, that worked.
Right.
And and the rest is like history. Everything else has built and built and built on each other. And it has been easy. That's one thing that a lot of people in business, they're grinding and struggling in their ideas and working. And it's because that idea may not be the right one.
Right.
Like when your steps are ordered,
Yeah.
he lays it out for you. He like, here you go. Here's the opportunity.
Yeah.
Here goes some free stuff. Here's a resource. And it just happened like that. And now
Boom.
we're all over the country. I have employees all over the country and we are winning.
Yeah. I like that. Okay. Clearly, we got a lot to take down and digest. But what I love is that, you always been business savvy. I can assume since younger, like you always been about it, been on the go and everything. Just knowing how that kind of transpired, like, has there been anyone in your life in particular that you like looked up to, that you was like, I want to do something like that, or I want to be something along those lines?
You know, it has been a combination of people, and not their careers per se, but how they're living. So my Uncle Gary, he's always been about his money. He was like one of the first people to bring 401k options to the force. Like he's in the police force. And this is years and years ago. And they were like, what?
Right.
Investing? And he was like, if you put this, you go get this, you know? And I saw him do that, and I saw him live a life in abundance. Not wildly crazy, wealthy, flashy, but never lacking. Okay, so I love that about him. Then I saw my auntie Cherie. She had a family. She was a strong woman, raising little boys, but she still had this big personality, and I really love that.
Right.
My mom is, her work ethic, I'll be like, what are you doing now, girl?
Mom do be doing her thing.
She does everything, you know, so that work ethic and that mentality to always want to go get it is something I get from her. So I took all these bits and pieces from everybody. Right. But I got to throw this in there. I was like the black sheep talking about I wanted to start a business.
Really? Out of everybody?
I'm a straight A student, graduating top of my class, you know, master's degree. They like, go get a job.
Right.
Go get a good job. Last year, mind you, we in a, you know, $1 million house, we driving nice cars. I mean, we're living well, right? My mom said, have you ever thought about doing insurance? Well, no, Mom, because I'm an accountant and a business coach, and I don't want to do anything else, you know? So it was something that it was extremely hard growing up and not having that person that thought like I did. I always knew I wanted more, and I wanted to get to it and make my own rules, right? But didn't have anybody saying, do this. Hold my hand, coaching me up. So I made a lot of pitfalls, a lot of mistakes I had to learn from trial and error. But I definitely got a little bit from a lot of people along the way.
Okay. Come through with it. I love to hear that, you know, because like I say, you've been on me since yay high. So, you know, basically blood. You just put it in there. So, you know, like I said before, looking up to you, I always seen you was on the go. You was always popping, like you said. You was around the right people. I'm like, I need to do what Sis doing. I need to figure out this business thing. So I know obviously you started getting into the accounting and everything. So I know you opened up your first spot. How was that transition? Opening up your first brick and mortar, getting your feet wet in that world? Like, what happened there?
That was extremely scary. I had to personally guarantee a 3-year lease off of, I hope this work out. You know what I'm saying? Like, I had the knowledge, I had a bit of the customer base. I had been doing taxes for a while at that point, but I was hoping that they followed me, you know, and it was kind of like a wish and a dream. But my husband actually poured into me. He was like, look, you do that, and I got you. So don't worry about nothing else. You don't have to worry about your rent or your mortgage or at that point I did own my house. So you don't have to worry about anything. Just focus on the business. Do you know within 30 days, I made back all of the money I invested?
Wow. 30 days?
30 days.
Everything?
30 days. Okay? I mean, when I tell you, ordered steps. So we got this place. The building was perfect. I thought the location was good. It was central. It was big. And I thought we can grow into it and all of that good stuff. And when we got there, the guy, foreign guy, looking at me like this little young black chick, you know, and he was like, the price is the price. I'd already discussed with my husband what I got. I ain't got that. I don't got that price. So I don't know if I'm going to get this building. And he was like, look, never fall in love with a deal. And I said, what? But I do love the deal. And just never fall in love with the deal. He said, this is the deal. These are the numbers. Go in there and tell them, take it or leave it. So I'm shaking. Because I really want to tell him, I'm going to risk it all. And just whatever you want, sir, you know. And he said, I mean, I'm just throwing a number out there, but I want to say he said like $5,000 a month.
Okay.
Yeah, I ain't got it.
Yeah.
Okay, listen,
Right.
get somebody else to do it. So I said, well, thank you so much. It was very nice meeting you.
Right.
And I like positioned to stand up.
Yeah.
And he said, what are you doing? I said, well, I'm going to leave. I told you over the phone that I didn't have the $5,000 a month, and I gave you a proposal.
Right.
And you're telling me you're not taking it, correct?
Mm-hmm.
And he said, sit down. And I was like, I don't got $5,000 a month. Now, at this point, I'm like, I need to go, sir. I don't have this money, and you ain't about to make me sign on no dotted line.
Yeah.
He was like, I like you. I like how business savvy you are. I liked how you presented your proposal, and I like how you stood your ground. He said, we'll go with your deal.
Wow. Just like that.
Well, well, if you say so. As I'm like jumping for joy and like, I'm ecstatic. I can't believe this is happening.
Right.
I signed so quickly. But then I'm immediately on the line for 3 years, $2,000 a month. What?
Yeah.
What am I gonna do?
Yeah.
But okay, that happens. You know the next thing? A church that I had did some work with before was giving away desks.
Really?
What?
Right.
Okay, let me go check them out.
Right.
These are pretty good desks. I got free desks.
Okay. So
Okay,
good way to
that's a couple
start
$1,000s down.
Right.
Then it was a transition of state senators or something like that.
Okay.
They were donating chairs.
Wow. And this is like back to back, like.
This back. This is like I get the lease, I get the desk, I get the chairs.
Wow.
Chairs free. Them chairs is nice. You remember them
Yeah,
chairs?
I've been there.
Nice.
Yeah, them comfy. Yeah.
So I'm like, okay. A friend of ours says, I got a flat screen TV if y'all want a flat screen TV.
Right. Yeah.
I'm like, okay.
Yeah.
We're
Give me
gonna
the
set
flat.
up the.
Yeah.
Trey, it was like boom, boom, boom.
Yeah.
All I had to do was like pay for the computers and the software.
Okay.
For real.
Yeah.
Like out of everything. Yeah. Mom came in there and did it up. She brought pictures she had in the garage.
Those plants. I know the plants.
She had an extra couch. Mom, why you got an extra couch in your garage? I don't know. Yeah. But it worked out perfectly. Okay. It was a beautiful spot.
Yeah.
It was ready. It looked like no other tax company. Because when you came in there, you felt like a family. You felt like home.
It did.
You chilling on the couch, you watching TV,
The couch was comfortable,
it was too comfortable.
He was falling asleep. I saw that a couple of times. Yeah.
So it was just,
Yeah.
And we banged. I opened up those doors and banged. Another important point in ordering steps is when I decided to do the tax company, it was like October. I needed to jump off by January.
Right.
Tax season, right?
Right.
Well, to get an EFIN, which is your electronic filing number with the IRS, they usually say that takes about 6 months. Wow. But I was like, let me throw it out there. If it come back, right?
Yeah.
Dre, I got the dang on EFIN number in 6 weeks.
What?
6 weeks.
6 weeks.
And they're asking for everything. They wanted my driving record, my credit report. Yeah. I'm still young at this point. I'm like, please, Lord, I hope I ain't doing nothing crazy. Right. Can't get this office. 6 weeks, like fast. I have never heard anybody get it back that fast.
Yeah.
So, ordered.
Yeah.
I said, okay, all right, God, this is what you want me to do.
Come through. Come on.
This is what you want me to do. All right.
Okay.
Yeah, it was awesome. But again, I made my initial investment back, but I'm still on the hook for the remainder of this lease.
Right.
So what we gonna do?
Right.
And I know how to make a tax season pop.
Yeah.
Okay.
Right.
So I never made less than 150 profit in a tax season.
Right.
But now I got to spend the rest of these months paying rent here. Is when I started to develop other services and try to figure out what can I do year round that is going to benefit my tax clients and have that be the gateway for them to stick with me. So the lease is what did that.
At least.
I would have never done that if we were filing remotely back then.
Yeah.
I would only be doing taxes.
It was that push.
It was that push.
Make you say, I got to hit this number. I got to pay this. I got to make it happen regardless. Otherwise, I'm out of.
I got to.
Yeah.
I'm going to be spending $16,000 to $20,000
Yeah.
on an empty space. I ain't doing it. I ain't doing it. I ain't doing it.
I wish I ain't doing it.
So, you know, everything just exactly how it was supposed to happen is how it happened.
That's a big blessing.
It is. It is.
That's the chairs, the flat seat, the couch, mom helping everybody.
It was like all hands on deck.
Yeah. And it's been going well ever since.
Ever since.
Right?
Every year has been increased.
And you do got a background in marketing and business too, so you already knew how to like push this thing and get it out there. So that's never really been a problem.
No.
Right?
No.
So for me now I'm thinking, because obviously, let's get into the tax side of things, right?
Yeah. Yeah.
You've been doing this for many, many years.
Yeah. You can go age me on me.
Well, you know, you experience, you experience, right? And so like, what's the difference? Because I hear this a lot between like CPAs and accountants, like the big rundown. Yeah. Is there a big difference? And if so, what that looks like?
There is a big difference. There's a very big difference. CPAs are the highest designation in accounting. Okay. So they do audits. They help publicly traded companies get set up. You know, they are very, very important to large businesses especially. Okay. Your enrolled agent is the largest and highest designation with the IRS. So these people have to know tax code. Right. They take their test with the IRS. Okay, so these people may not be able to give you your income statements laid out in your, you know, annual report like a CPA, but they definitely know taxes more than that CPA. Okay. Your accountant and enrolled agent like I am, I am here to make sure the numbers make sense. Okay. Everything that I do is focused on saving on taxes and also organizing your finances. So I work with a lot more small and medium-sized companies, of course, because once you get to publicly traded, kind of need to hand you over to the person that is designated to do so. Right. So big difference. When we're talking about tax law and tax code, I get hundreds of returns every year from someone saying, but a CPA did it. How did they mess up? They didn't even claim this. I didn't even know I could do that. Right. They told me I didn't have that deduction available to me.
Yeah, I've been there.
And it's because they don't know. Right. That's not their bread and butter. Right. They're just, you know, doing that probably almost as a favor to you almost, you know. Yeah. I know a couple CPAs who have tax offices, and I assume that they are a little bit more into taxes than your average CPA. But that's not what they do. That's not what they go to school for. That's not what the CPA exam is focused on. And you kind of need to be up on it. Yeah. Since the 2017 Tax Cuts and Jobs Act, every year has been something.
Right. It's been a lot happening.
It's been so many changes.
Yeah.
So anybody who was doing taxes prior to 2018 tax year, you don't know nothing. If you ain't been up on the tax code in these last 2 years, you don't know nothing. You messing up people's taxes. Yeah. So, you know, just making sure that you're with someone who understands what you need. And if tax liability is your problem right now, or growth in your business, or organizing your finances, then you need to see me. Yeah. If you're trying to go public, go see a CPA.
There you go. I'm going to stick with you regardless. So I got to go public, you know what I'm saying? Kitty, no, I got to, you know.
Then I'm going to have to go take the test.
You're going to make it happen. But I'm glad you said that, because a lot of people clearly come to me like, I do taxes. For some odd reason, I don't do taxes. But they're like, Trey, do you know any? Do you do it? I'm like, no, but I know someone for you, okay? And so I know you get a lot of people coming to you from like TurboTax. It's a lot of questions about this Cash App, Venmo, 1099. Let's just talk about all of that, because I know that's what people want to know. Yeah. Right. Let's start with the Cash App thing, the Venmo. Is that still a thing? Did they stop that completely because they got to send out 1099s? Like, what's going on?
No. So they did delay it. Yeah. And thankfully for a lot of people, because they were like, oh yeah, I don't even know. But here's a couple key things. One is only if you have a business account. Okay. So a lot of people are dibbling and dabbling in their personal account. Don't do that. But if you are safe for now. It's only for your business account. But you will receive a 1099-K form if you have any transactions that total up to $600 or more. So a lot of people who think they got a little side hustle or, this ain't really a business for real.
Playing around.
I just kind of do it for my family. And you made $3,000, right? $3,000 could be the difference between a 12% and a 24%. Like, it's like, it's that little bit of money that can really do your taxes over. You'll be like, oh my goodness, I was just getting a refund last year. How do I owe? And so keeping track of not only the income that you had, but all of the expenses and knowing what you could potentially deduct from that is hugely important.
Okay.
So many people are like, I already had the software on my laptop, so I just did it, or, well, I had some stuff left over from my baby birthday party and I used it for this event. Listen, I don't care when you bought that stuff. If you use it for business, let's get it in the write-offs.
Right.
Period. Like, it's so much that can be written off, and it's so much that the tax code does allow for business owners.
Right.
So you just have to start thinking like one.
Okay.
Stop thinking that you just have a side hustle. If you're making more than $600 and about to get a 1099-K, start acting like a business right now. Right now.
Yeah.
Because they are sending them 2023, you will receive that 1099-K.
Can't avoid it.
They delayed this, and that means they're ramping up.
Oh.
The delay.
How many? It's like 87,000 agents or something. Like, is that real too? Should we be worried as the public, as the
people?
Very
real. Which is why the Republicans are trying to stop the funding to the IRS.
Okay.
And So let's start where we gotta start.
Yeah.
One, the IRS being all up in our pockets is craziness.
Right.
We are supposed to know all of the government's business, not vice versa.
Right.
Okay, so I'm getting a little too up in my pockets with my $600 now, okay? Seriously.
Yeah.
But at the end of the day, it's been so much tax evasion. Taxes is what, funds a lot of our government programs. And it's how we operate as a country.
Right. True.
So, do we need to give the IRS $80 million to ramp up? I don't know.
Yeah.
But they got it. Right now, they got it.
They got everybody money.
It is what it is. So let's get prepared.
Yeah. So what advice would you give to, the everyday worker, the business owner as well, just how to prepare for going into this new season, preparing for those 87,000 agents, people coming for your pockets, 1099s. It's a lot of stress.
It really is.
Like, what do you?
The number one piece of advice is keep your records in order.
Yeah.
When you came over here and we met up, I want you to have start, stop on your Miles IQ app.
Yeah.
Keep track of those miles.
Yep.
Like, seriously, every piece of equipment, the lighting, the camera, everything here, we're depreciating. If you travel, like this is a huge one that some people try to either avoid or they overuse. Travel is a deduction that we should be utilizing. Listen, honeymoons, birthdays, everything we travel for, I'm gonna do some business there. And I'm going to document it. I'm going to have an email thread saying, hey, want to meet up for lunch?
Yeah.
Hey, want to go over your books while I'm in town? Because I have clients everywhere.
Right.
All of those things are the track record that the IRS needs.
Okay.
Because, they're going to see on my bank statement that it shows that I purchased a Delta ticket. That don't mean nothing to them.
So they need to know what you're going there for, who with, like everything.
Everything. Okay. And in order to write off travel, you need to make sure that, especially overnight travel, you have to make sure that the work that you said you were going there to do is going to take more than the day. So for instance, if I know I want to go for the weekend, I might make business on Friday and some more business on Monday.
Okay.
IRS, you want me to go home and come back and write all of that off, or you want to just let me stay? They're going to let you stay.
Okay.
But if I write off the whole weekend and I had a lunch meeting on Friday at noon, you could have got up out of there.
Right.
You were chilling.
Yeah. Catch me on the beach.
You know what I'm
Kicked
saying?
out.
So it's like, make it make sense.
Okay.
So not only do the numbers need to tell a story, but you need to provide the additional substantial evidence saying, IRS, you said this. You said I could go to this meeting in Florida and meet on Friday and Monday. This is in your handbook, you know?
Okay.
So record keeping. So if it's the end of the year and you're like, oh, where are my receipts? Oh, everything's faded. Oh, my goodness. I don't know which account I bought that ticket out of. You're already lost.
Oh.
You're done.
Okay.
Because when IRS come for you, they're going to be like, oh, so you had a business trip, but you did it out of your personal account and you didn't even transfer the money back to yourself from your business account to reimburse yourself. And then that happened back in February of last year, but you said, and you're going to be like this. Because the way they talk, you ever been to an IRS meeting, you'd be like, yes, ma'am. I'm like, do they teach y'all how to be stoic and not compassionate at all? But seriously, you have to keep your records in order.
Okay.
It's the number one thing.
So basically what I got out of that was
Go
to jail or give everything to you and be like, help me.
Yep.
What Kevin Hart say? Help me. Help me.
Help me.
I need to know.
Yes.
Okay. So yeah. Everybody that's listening right now, if you're watching this, clearly you can see. Okay. Go to Jenni. But if you're listening to this in the podcast, definitely take note. We're gonna put all the links and descriptions and everything down below. But with that being said, though, let's talk TurboTax really quick. Because that told me everything I need to know. TurboTax. Because everybody go to TurboTax. And I understand to a degree why some people do, if they just have a W-2, right? Or
absolutely.
Do you recommend people going to TurboTax knowing what you know now? Because I think they're going through this whole phase of they're charging now. Is that
Okay. Oh, yeah. So they always had hidden fees.
Okay.
And a lot of people be like, no, I went free on TurboTax. And now I show them where they didn't go free on TurboTax. Right. But this is the thing. The human element and the human error element are all really, really big things that could be costing you thousands of dollars. Okay. In my consultation, in our conversation, or me taking a look at your bank statements, or me having more understanding of what your business does or what you do on the side, I can ask questions based on that. There is no, if you choose this answer, then it's this answer. But if you choose this answer, then it's this answer. Right. TurboTax is saying, hey, do you have any of these forms? What if you don't?
Yeah. Now what?
Like in the end, and you're done.
Then it's over. Okay.
And you're like, wait a minute, I didn't know it was a school form, and I did get a 1098-T form from school, and I could have wrote that off, or I didn't know that my property taxes go on my state form if you're in Michigan. It's a lot of different nuances that the questionnaire is just, my client intake sheet is just to let me know what other questions to ask you. Yeah. That's good. It's the basic information so that I know what more to ask of you. Right. I know which direction you to go in. Like, you're not a tax professional. Right. Why would you handle something like this? Yeah. I've had people being audited. I mean, owing tens of thousands of dollars on taxes they did themselves. So they don't even have the element of, I didn't know. Yeah. Right. Like, they did it, I gave them all of it. They don't even have that, deniability. So it's a couple dollars that could save you thousands of dollars. It makes no sense. Now, even for someone, I used to tell people, if you just have a W-2, absolutely go to TurboTax, right? Okay. You just put in a W-2. But I also just realized that there's so many people that think they only have a W-2, but they own their home. They made energy efficient improvements to their home last year. Yeah. They actually started a business with their kid last year and had a startup cost up to $5,000. And they're like, but all I had was a W-2, and I just put my W-2 in. And I'm like, no.
Right, there's more to it. There's more
It's
to it.
so much more to it.
Okay.
You know, so it's always best to at least have a consultation with a tax professional and allow them to tell you. I mean, if they're real, I'm real.
Yeah. Right.
I'll say, oh yeah, you sound like you ain't got nothing.
Yeah.
I would do that for sure on TurboTax. You come back to me when you got any of the stuff we discussed.
Yeah. That's big.
Simple as that.
Make it easy.
Make it so easy.
That's right. Yeah.
Because
Okay.
I don't got time to be W-2 punching either. I don't want to do it. Like,
Right. Make it plain and simple. Okay.
Yeah.
Okay. Because I know you mentioned obviously a lot of people go through and they get audited,
yes.
and they come into you probably trying to fix everything. And I know you had those talks a lot. Like, you should have just came to me first, right?
Yes.
So knowing how that is, like, what's the benefits of each? If we could go into it, like, do you recommend certain runs for certain people? Is there certain limits once you make?
Absolutely.
Yeah.
So LLCs are an asset protection entity.
Okay.
So anything in your business that you are trying to protect from someone, you know, people,
Yeah.
we live in the era of my fries is cold, give me another fry. Like, come on, like, go warm them up. You know, you're at McDonald's.
Right.
You know, so we're in that world. So anybody who does not have the best experience with you, they're looking to shut you down. They want to sue you. They want to take you to small claims court. They want to blast you on the internet. All of this great stuff, right? Business owners, all the joys. But if you do not have your assets protected, they can come after you and everything that you own.
Right. Oh, Lord.
Your house, your car, everything.
Yeah.
They say, oh, you open. Cool. But when you're protected as an LLC, they can only come after the assets of that LLC.
Right.
So that's one that pretty much across the board I'm recommending.
Okay.
Couple things about that. One, I do not recommend doing your LLCs for yourself anymore. Okay. And you know I used to shoot LLCs out.
Right. Why not? What's?
There's so much that can go into your articles of incorporation that you really need to sit down with an attorney and go through what assets are in there. Okay. If you do a simple LLC form and you just put your name and perpetual and what you do in your business and sign it, you don't put down that your laptop or this, your video, look, your videographer. Sorry, we don't own you. The lighting, everything, those are parts of the business.
Right.
You want them protected underneath the business. Yeah. You want that anybody that comes after you, they can only get to the business. Okay. And you want to have that stuff outlined. Okay. You also want to make sure that those assets are protected from any shenanigans you got going on. Yeah. You know, if your credit ain't on the way right, and you got people coming after you for other reasons, nope, that's the business. Okay. That's the business stuff. You know,
keep that
so
separate.
Little stuff like that, or succession plans. Okay. Like, if I die right now, I need to make sure that my business is going to who I want it to go to, when I want it to go to them, in the order that I want it to go to them. Right. All of that is stuff that it can be put in your articles of incorporation, especially for partnerships. Yeah. We can talk for hours on that, but I don't recommend. Okay. But partnerships, you want to have that operating agreement tied down, locked down. Who do I, if you want to leave, how do you sell your shares to me? Or can you just leave and still get pros? Or all of that stuff needs to be written out, and an attorney can help write that out in the best way for you. Okay. But backing on up.
I got you.
Going back to S Corp. S Corp is an election. So you are electing to the IRS to be considered a pass-through entity. Yeah. You're saying, tax me like a corporation. But don't tax me like a C Corp, because they get taxed twice. But tax me like a corporation. You're saying, I want to be able to pay myself from this business, pay taxes on only employment taxes, 15.3%, on only the money that I paid myself. And I want to write all of that off before I send the IRS what my business made. Okay. I like that. So, C Corps, if you have multiple shareholders, especially, I would say a minimum of 10, and you are saying that maybe you got 30%, the rest of them got 10%, that type of thing, C Corps can have its benefits. It's a lot of things you can do with a C Corp. Does not make sense for a sole owner. So, if you are in a business and your net profit It's 42,000.
Yeah.
Okay. Some people that's like, ooh, that's a big old number. Some people are like, 40, that's it.
Yeah, right.
42,000. You are grossly overpaying in taxes if you are an LLC or a sole proprietor.
Wow.
Stop it.
Really?
Right now.
Yeah.
Right now.
Okay.
S Corp election.
Y'all heard her. Pay. Hey, switch. Change it. All right.
Go.
LLC. LLC and S Corp.
Yes.
Okay. Wow. So it's a big, big difference in that.
Big difference.
Okay.
So, I mean, for instance, you are, based on the tax bracket that you fall in, you're paying taxes on that. But then every dollar in an LLC that you do not deduct is also your earnings. Okay. So you also have to pay their 15.3% employment taxes on that. But what if some of that money was reinvested in a business? Some of that money I just want to save for a rainy day in a business.
Right.
I didn't really use all that money. You still paying taxes on it. Yeah. Double.
Yeah. Okay.
Yeah.
Yeah, I need to talk to Trump.
I know.
Trump doing something. That's all I know, because he ain't paying no taxes or something going on. Let's talk about Trump.
Yeah,
What's going on with Trump? Okay. So what's going on? Because you probably know more about the ordeal of so-called his taxes being exposed. He's been hiding them.
Yeah.
How do I get like Trump?
You know, there are some things that Trump utilized to the fullest extent, and I'm giving him props.
Yeah.
Now, after taking a look at some of his tax return information, I mean, he was taking negative $30+ million AGI, like his net income, negative 32 million. Like what? How? I wouldn't even have submitted that return, so I know I ain't in that game yet. But some of the things that he took full advantage of, and I encourage everybody to, is depreciation of assets.
Okay. Assets.
Okay.
Yeah.
If you pour coffee for your clients when they come in, that Keurig is an asset, should be depreciated. Period.
Yeah.
And if you have any properties, which he has hundreds of, the IRS allows us residential 27.5 years.
Yeah.
Commercial is like 39 years of depreciation. So if you buy a building for $1 million, which is chump change to somebody who, like him, right? You get to divide that basically by 27.5 years and take that deduction off your return for all that time.
Wow.
So if you don't do nothing with it, or, you have minimal expenses with it, you still have that large deduction every year. So he is the business owner in some type of way of hundreds of entities.
Right.
Hundreds of properties. I mean, his tax return was a booklet. Like, wait, we still going through this the same year?
Can I get a copy? Can I get a copy? I need to know what's going on.
Like, seriously, it's so much information.
Yeah.
And it's not, here's the thing.
Break it down.
They would love to find something illegal on Trump, okay? Yeah. They would love to go in that tax return and be like, please let it be one property that they use, please. And they ain't found it yet.
Right.
So I'm gonna say that when that man said he know the tax code better than IRS, he might know the tax code a little better than IRS. I ain't gonna say nothing else. But when you have the amount of money that he has coming in, and you have the number of assets that he has, it makes sense to be able to hone in on tax code. Yeah. Tax code favors businesses.
I heard that.
Period.
I heard that a lot. It doesn't favor the employee. It doesn't favor anybody else. It's just business owner.
And he's no employee of anybody, you know.
Right.
He's the business owner.
Yeah.
His wages are the most minimal thing on his return. You know, so it's not like he's paying a ton of employment taxes on himself because he's not having earnings.
Right.
He has assets that are appreciating in value.
Assets.
He's investing his money in different places. All of those things are what we can be utilizing at any income level.
We need to create a spreadsheet.
Yeah, we do.
Yeah, and just break this down.
And like a Venn diagram. Like, if you're going to do more money.
Put Trump icon. You want to be like this. Get all the asset lists.
Yeah, so,
that's big.
I ain't saying I want to be like Trump in no other way, but I will run run them tax codes
Right.
from them. Like,
Let's get these numbers together.
yeah, let's
real
get
quick.
these numbers together. Seriously.
Because I feel like it's a big difference between like the rich and the wealthy on how they play the game.
Absolutely.
Right.
Absolutely.
And so, you know, I've interviewed other people. You sat down with successful men and women as well.
Yeah.
And they all say something similar along the lines of just protecting money, being smart with it and everything. But I feel like everyone manages their finances differently.
Yeah.
Have you seen anything in your experience and working with people, like the difference between like the rich and wealthy when it comes to doing certain things?
Yeah, one of the biggest things is rich people keep a lot of their money in the bank. They like to be liquid. They like to see it.
Yeah.
They like to pull their bank. Yeah.
For the cars out.
Yeah, you see that? You know, wealthy people don't trust the bank. They like, ain't no money. I ain't getting no interest on this money. You just holding on to my money. You using my money for loans and stuff. No, run me my money. I'm gonna put this here, here, here.
Yeah.
I'm in this index fund. I'm in this REIT. I'm investing.
Okay.
So I still have access to my money, but it is gaining interest as it sits there. And that is one of the biggest differences.
Right.
So my people who like, you know, I got like $100,000 in the bank right now, and so whatever my tax bill is, it is what it is. I'm like, do you want me to give you a tax bill for $100,000,
Right.
or are you just like letting me know that you're not wealthy yet? Because that's what I'm hearing.
Okay.
So one of the biggest things. So where you have your money and how you use your money is a huge difference.
Okay.
Another thing is rich people, to save on taxes, they try to buy a whole bunch of stuff. Well, what if I buy me a Sprinter van? And what if I buy everybody at the office new laptops?
Yeah.
That'll write off about
It sounds logical.
$60,000 and then we'll be good, right? Well, yeah, tax-wise for this year, you'll be straight.
Yeah.
But do you need any of those things? Are you actually going to utilize that Sprinter vehicle for the business? Is it going to help you grow the business?
Right.
Generate additional revenue? Or are you just trying to make sure you don't have to pay the IRS taxes on that money this year?
Right.
Wealthy are like, they're like, okay, I'm going to maximize my contributions to all of these different entities that I know are write-offs. You know, I'm going to give to charitable contributions. I'm going to make sure, of course, their IRAs and all of that stuff is maxed out, of course, you know, but they are not trying to spend in order to save. They're investing or getting possession of assets in order to save.
Okay, that's the game.
That's the game.
Sounds like Monopoly 2.0.
You know,
Give me all the props.
we learned it early. We learned it early. It ain't sticking though.
That is true. That's true. Okay. Because now you said a couple things, and one thing that stood out to me was like contributions and where people put their money.
Yeah.
Right. So you got Roth IRAs, right? You got 401ks. I don't know.
SEP IRA.
Yeah. So clearly you know it. That's what I got you here. You got you here. So like, okay, let's break that down in terms of how that looks for the everyday individual for like 401ks and for Roth IRAs.
So those are the two that I really focus on, especially for the middle class. Yeah. Because one, 401ks, you can deduct on your taxes. It's a tax deduction. Your contributions. Roth IRAs is not a deduction on your taxes because technically you are already taxed on that money before you contributed.
Right. Okay.
Roth IRAs are only contributed through your W-2 wages.
Okay.
So, but Roth IRA, every dollar you contribute, you can pull whenever you want to, tax-free.
Yeah.
401k, you pull from that before you 59 and a half years old. Yeah. You got 10% additional penalty, and it's included in your overall income. So again, that's something that could potentially take you to the next tax bracket just because you had a hardship that year. So if you're someone who knows that you may want to dibble and dabble, you might need that money in a little bit, but you want to try to focus on building it up right now, I would absolutely start with the Roth.
Okay.
But if you're someone who you know, I need auto write-offs. I need to maximize everything on this tax return so that I don't have to pay, and I can set $22,500 to the side because I know I'm not going to need that until at least I'm 59 and a half. 401k. Right. So you want to look at, that's why tax planning at all stages is so important. Look at what's actually going to benefit you the most. You know, do you even have $22,500 to contribute, or do you only got the $6,000? And will $6,000 in a 401k contribution really make that much of a difference on your return? Or do you just want to pay the taxes on it and be liquid, you know? So it's a lot of different things that you have to think about, and you want to be able to look at it in totality of your income each year.
Right.
Because it changes, you know, we know business, we go up and down. And some people still balling off of last year. And I tell them, I sit down, I say, well, how much do you think you made this year? Well, you know, I mean, 2021 I made like 100, so I know I must have made like 150. I said, well, you made 75. So that you've been eating off of the money you made in 2021, not keeping track of your books, and didn't even realize you took a $25,000 loss this year.
That's crazy.
Happens all the time.
All the time.
And they be like, wait, let me see.
Give me the papers.
You gave me these papers.
You did something. Where the actions 15, 20 at?
Yeah, you right. August, September, I did. You right.
Went splurge and did some stuff.
Yeah.
That's usually what happens.
I took some time off.
Yeah.
You kept looking at your bank account. Stop looking at your bank account. Stop.
Figure it out.
You know, you make a decision just based on what's in the account right now. But not thinking about where that money was generated from, what bill is upcoming. You're not thinking about anything. You're just thinking about right now, this account says this amount of money.
Right, in this moment.
No, you're not thinking about outstanding invoices. You're not even thinking about outstanding bills. Maybe you know, sent an electronic check for something and it hasn't even cashed. So you're just looking at this money. Now you made a purchase or you made a financial decision without actually having your finances in order. One of the biggest mistakes you can do.
Well, you know, we're not going to charge you guys for that information. That was all free. But, you know, it's levels to the game, clearly. So, I think that was very, very important just to break down and get a clear understanding of. Because I know a lot of people, you know, kind of weigh out Roth IRAs, 401ks, where to put the money, and clearly we should go to you. But let's switch gears really quick. I want to ask you like a real deep question. I don't think I ever asked you this question. Okay, so this is
you asking me some questions.
We do be talking. So, you know, but like, okay, we talking money, we talking finances, very successful at what you do, track record proves it, right? Has there ever been a moment in your career where it was like, hit that rock bottom moment? Maybe it was tough, challenging, maybe a negative in the account, anything that was just like, how am I gonna get out of this? And how did you like?
Well, I ain't never had no negative on my account. I'm sorry, I'm the numbers lady. I cut all these cables off. We wouldn't get that no lights, but I got a negative in the account. But the pandemic, March, the peak of tax season. They say you got to stay home. We on quarantine. I said, okay, well, maybe I need a little break. We'll be off for a couple days. We'll be back on Monday, right? They said, we're going to take another 2 weeks. Hold on, wait a minute now. Hold on, this is my money-making time. What do you... We don't know when we go return. Hold on, wait. What?
Right.
What? Hold on.
What to do?
I had no online system in place. None. Okay? I utilized Dropbox for some of my out-of-state clients, but it wasn't really a system. Yeah, I had like a DocuSign for some people, but it wasn't anything. I had to panic for 2 seconds because that's all I had because it's time. Because what you gonna do? Are you gonna just not get any money for the rest of the season and just leave your clients out there, or are you gonna revamp? And that year, I built out an entire online portal where people were able to securely upload their documents from anywhere in the world.
Clutch.
So now, ITing it up. I'm paying money out to get help with these services and processes and software, and I'm really not making no money yet. So, thankfully, I had a successful January, February, and I was able to kind of maintain. And then the IRS pushed tax season out to October that year.
True.
So, again, aligned, ordered. Okay. So this was a very, I was like, all right, guy, you don't want me to do taxes no more. Just say that.
Yeah.
You know, you ain't got to like throw me out there like that.
Right.
And it was at the point where I knew I wanted to transition more to business clients and get out of the individual tax prep game. And it happened 5 years earlier.
Really?
So I had just signed a 5-year lease that January.
Yeah. Wow.
Okay. And I told my husband, I said, 5 years, that's it. I'm going to grow this thing. I'm going to grow my team. They go take over the individual taxes, and then I'll be in a business, and I'll have me a suite somewhere close to the house, and boom.
Yep.
Well, that happened that May. That May, I had my team working on the individual taxes while I was on the business taxes. I got a suite closer to the house. It happened. And it was against my will. It was definitely not my timing, but it was scary. And it was the first time that I really had to pivot. And pivot in a way I hadn't planned for.
Okay.
So I've always thought about down the line. I was like, you know what? I used to tell my husband this a few years ago. The IRS about to start doing all our taxes for us.
Really?
We about to be obsolete. Because they were doing things like, they increased the standard deduction. So a lot of itemizing that middle class used to do, they can't do. The deductions aren't there anymore. So I'm like, what they doing with that? Yeah.
What's
they
happening?
only want you to submit your W-2.
Right.
And then they made it just too easy. It was getting too easy. The taxes were if you didn't have a business.
Okay.
So I was like, the IRS looking towards eliminating tax preparers. I already know it. Yeah. So that's something I had thought about, right? I didn't think they was gonna shut down the offices and quarantine us. And what precedent did I have? Yeah. I had nothing. So that was a very, very scary time. That ended up being a very, very lucrative time.
That's what I was gonna ask. Like, what happened after
if I wasn't able to get myself together, because I could have been like, all right, man, this your year to handle the house and stuff.
Everything, take the bills.
Listen, I'm chilling. But I knew that I was in a season where I was about to go to the next level. I felt it. I had a 5-year plan, and God sped it up for me. So pivoting and really adjusting in that time prepare me for anything. I'm built for tough. Like, I'm built for this. Like, what you want to do? IRS can shut down tomorrow. I'll be like, well, thank goodness I have all of my accounting clients. And, so just having that ability to take your moment. Take your moment. That was a gut punch. Yeah. And I need to catch my breath real quick. This is what we're doing right now. Yeah. But being able to pivot, being able to have my eye on my end goal and say, well, what are you going to do if you want to do this in 5 years? Still thinking it was 5 years away, not knowing this is the year it was happening. Yeah. Most lucrative year.
That's big.
It totally transitioned my gross revenue forever. Wow. It did.
So moving forward, do you see yourself just being remote and just not going back to a brick and mortar?
I think about this all the time. Yeah. All the time. So here's the thing. The people who want me in the office are the people I'm not going to be servicing in a minute. They my people that I see once a year for tax prep. Okay. They want me to kiss babies and laugh and kiki with them, which I love to do. But I won't even be doing those people's taxes in a minute, like at all. I barely do them now. Okay. So those are the only ones that are like, can I meet you at the office? Can I? Yeah. No, ma'am. You got the coronavirus. You try to take me out. No, you cannot.
Not the coronavirus.
But here's a couple things. These were the winning things for me. Yeah. I have been the most present with my children than I could have ever been with the growth and success of the business in the office. So I do what I got to do, but I'm here. I cook dinner every night. I tuck in and kiss babies every night. You know, we're reading stories, we're playing matching games, and I'm a Spider-Man race car. And, you know, I got Cabbage Patch babies, all of that. I get to do that. I'm present. I get my babies dressed every morning. I used to be out of here before my baby woke up, and I would be coming home after he went back to sleep when I was in the office. I missed him. I missed all the moments. And, you know, thankfully, my husband was so clutch. I mean, he's like super dad, you know. Like, people think I'm super mom, but I'm like trying. He's like super dad on mistake. Like, you know, and he was here, he'd be like, look, he's walking. What the?
Like, I missed it.
And I'm sitting here with you talking about why I ain't getting 10,000 like Ray Ray. I was getting mad. I was like, I got to get out of this game. And so that coupled with every hour I would be able to see what, one client, maybe two, you know, because I'm talking and we're catching up and all of that good stuff. Now, if I have all of the information that I've requested from you, my team has done the bookkeeping, you have filled out the client intake sheet, I can knock out a detailed tax return in 20 minutes.
Just like that.
Just like that.
Okay. Y'all heard that.
So now, I'm sitting here with all of my information, and I'm knocking them out. My productivity is like 10 times. You know, and I still have my moments of interacting, and I'm Zoom calling, and I'm checking in on people's families and all of that stuff, because a lot of my clients have been with me a decade. You know, I've watched their kid. They talk about their kid having a kid, and I'm like, well, wait, how? Because they're 5, right? Like, no, they're 25. Like, wait, what? Hold on, wait, what's just happened? Like, you know, so it's a lot of things that go into my decision, but I, not to mention, I'm a snowbird. You already know I get up out of here. The snow is throwing me. I'm like,
it's that time, right? You gotta.
Is it time for us to get up out of here? So all of those things together, I am really thinking that remote will be the way. But the culture of my employees and how they operate and everything, if at some point I had the vast majority of my staff in one place, maybe. Right now they're in Arizona, they're in Atlanta, they, you know, like, what I'm gonna do? Get everybody off? No. So getting away from that client who is shopping around and going to 2-3 H&R Blocks and a Jackson Hewitt and a mom and pop to see who will give them the biggest advance or see if the numbers change, which they should not. You know, I don't want that client anymore. I love you guys. You guys helped me start, but it's draining.
Understood.
It's draining. So, you know, my business clients are like, girl, here come my bank statements. Tell me what I got to do, you know, and then we're done. And they don't have time to come in the office, and they don't feel like getting their paperwork together. They want to know that I got this.
Hands off.
Hands off.
Make it easy.
And I make it easy.
All right. I like to hear that. Well, you did say a couple things to me just now that stood out. You wear many hats.
Yes.
Supermom. You said Cabbage Patch, something. Cast Spider-Man around here. Got a lot of hats. But what I do notice, I know you wrote a book that we have. It's called Success Failed Me. So tell me about this book in detail in terms of like what inspired it and what can people expect from it, you know, while you wrote it.
So, you know, I focus so much on business entities who have some data. So someone who's been in business for a few years, who's made 30,000 or more each year, and all of the people with these new ideas, they're like, Jenni, but I need you. And I didn't feel comfortable charging them, you know, hundreds of dollars for my time in order to tell them some stuff that I would give away for free. I think everybody needs this. So that kind of inspired the book. And then I sat down and I thought about it. And I'm like, I didn't have anyone, no business owners around me growing up. I didn't see anything. So I made all the mistakes.
Right.
I was doing everything trying to keep up with the Joneses. And it was hitting me. I'm like, wait, that one right?
Right.
Well, I got all this staff. I ain't made no money for it, you know?
Yeah.
And I put it all in the book. So I made a step-by-step guide, but I also debunked the myths that we always hear.
Okay.
You know, so all of the things that you got to have a storefront, or you got to have employees, or you got to have this much money.
Right.
No, you don't.
It's all in here.
It's all in it.
Okay. I like that. No, I love the cover too, by the way. Who did that?
Well,
It's so nice,
Level Up Daily, you know.
That's crazy.
It's little guy I know who does all my logos, all my websites, all my everything.
It's so beautiful.
DeAndre Evans.
You know. But no, I definitely appreciate you, taking time out to come onto the show and really like dive into, what to look out for, what to expect in terms of, especially this tax season, because it started, right?
Oh my goodness, yes.
And I know it's been crazy.
Yes.
But you said this month's been pretty good for you.
It's been huge.
Yeah.
I'm like, did everybody remember to do their taxes this year?
Right.
Like, yeah.
That's a big thing. So my last question to you is one of my favorites, and I think it'll help a lot of people, which is, what is the best advice that you received when it comes to money, and what's the worst advice you received?
This is a good one. So, I said this one earlier, but it has been something that has stuck with me through everything. And it's never fall in love with the deal. And that is such a big money thing, because we often make decisions based on what we can afford, not based on what the value of that decision is. Meaning, yeah, you can afford whatever house you want, right? But are you buying it in a higher market where you're overpriced for it? Is it something that is a necessity to your life right now? Do you even know if you want to be here? Are you a rental person? Like, it's so many other things that go into the value of things versus just the deal. What's on the floor right now? Partnerships get started all the time because we just kicking it, and you came up with the idea, but I got all the resources, so we go 50-50 split. No, thank you. Thank you for your idea, and I will compensate you if you would like, but no, you don't get 50% of my property or my profits or my business just because the deal was on the table right here. That's not how this works. So never fall in love with the deal is probably one of the best pieces of advice. Worst pieces of advice. Where do we begin?
I know you probably got a couple in the book too.
Listen,
a little sneak peek.
Paying down student loans. If you sit there and you make an aggressive plan to pay down your student loans, and let's just say you spent the $22,500 in that year that you could have been putting in your IRA, reducing your tax liability and setting yourself up for retirement, you pay it down and you still $80,000 in the hole, don't got nothing to show for it, and it does not impact your credit score too negatively if you just pay what you're supposed to pay every month. So I remember having this aggressive plan to just pay it off, right? And I started to look at how much I could gain off of investing that money versus how much it would hurt me carrying that debt. And the math wasn't mathing. It was not. Sir, I'm still trying to figure out when they're going to come get this degree. I don't want it no more. I don't use it. All the stuff I learned on journalism is obsolete now. All of this good stuff. But yeah, I'm compliant. I'm never going to default. But you going to get it when you get it, fellow. Like, I got to set my family up while I can. And no judgment to the people who have paid it off. I mean, it does increase your net worth. That is a part of your debt. So it's something great, but don't sit up there and actively participate in only debt repayment where you forget the investment in savings.
That's strong. Well, I love to hear it. And ladies and gentlemen, I hope y'all took some notes because she said a lot. And I'm so grateful that she's my accountant because I don't have to worry about my life here when it comes to money. But with that being said, I want to say thank you so much for coming onto the show.
Thank you.
I feel like obviously it's been long overdue. We should have been to this. We got to do this again in a different setting for sure. But I want to say thank you and, good luck to a strong tax season.
Thank you so much for having me. It's always cool talking to you.
It's what we do. Now, where the drinks at? Let's go.
Where the drinks?
But until next time, ladies and gentlemen, much love, peace, and blessings.